Okay, so we'll start. Hi, everybody. My name is Sophia Pascuzzo. I am the Customer Marketing Associate here at RKL eSolutions. A few things before we get started. So all mics are turned off for this webinar. So if you'd like to ask a question, please use the Q&A feature at the bottom of the screen. We'll try to answer all questions throughout or at the end of the presentation. Today, we've got the tax compliance experts at Avalara joining us to talk about important tax compliance laws, regulations, and trends in the U.S. that your business needs to know about. We're joined by Alex Lyons, a sales executive at Avalara for 5 years now, who has been working with RKL and our clients for years exclusively in the Sage world. She has successfully onboarded and helped to automate tax compliance for many Sage 100, 500, and X3 clients. She's a great resource on all kinds of tax compliance issues, and we're excited to have her with us today. So Alex, I'm going to pass it over to you so we can get started.
Thank you, Sophia. I appreciate it. And thank you everyone for joining today, especially probably during your lunch to talk about really exciting topic of sales tax. Hopefully, we can keep this sort of simple and high level. I want to make it as non-confusing as possible. I always want to really encourage you, if you have questions throughout this, please answer them. I would love to break it up a bit and hear some other voices other than my own. And also, if things are getting a little bit confusing, I'm also super happy to have a one-on-one call at another time just to sort of talk a little bit more specifically about your business. So please feel free to send questions over. So today, sort of what we're going to be talking about, not really a new topic. If you've been in the Sage world for long, I'm sure you've seen information come through at some point about the Wayfair ruling, Nexus changes, but we are sort of going to revisit some of that. And I mainly want to talk about what I'm seeing in the space today with a lot of my customers that I'm working with. And hopefully you can walk away from this today with some information that you guys can use. So I'm going to talk about what is Nexus, why does it matter? What are some trends I'm seeing? When it comes to audit risk, I want to talk about sort of what the customers I'm working with today are seeing in terms of challenges with audits around Nexus. And then also at the end, we will talk a little bit about if any of this sparks a red flag to you. If you have questions, I want to talk about how you can kind of work to fix some of this if some things seem off base. So let's go ahead and dive in. So the first thing I will address is just the word Nexus. I use it a lot and I always forget that people don't always necessarily know what it means. The word Nexus, really, most simply, it is a business's obligation to collect and remit sales tax to a state. So generally speaking, a business has to establish Nexus with a state in order to have an obligation to collect tax and remit to that state. There are multiple ways that connection can be established. So historically, physically is really the only way that people were creating Nexus. And when I say historically, I mean, 10 plus years ago, where your business was located, that is where you had to create or where you had to collect tax. That's the only place you had to collect tax. You don't have to worry about any other states. That has changed tremendously over the last few years. So physical Nexus is still very much alive, but something I still come across with a lot of the people that I talk with is people haven't necessarily kept up with the physical Nexus changes. So while it did used to really only be where you physically had an office or physical location, it now sort of pertains to anything that puts a tie between your business, your employees, your products, and another state. So some of the common things I sort of see get missed. Trade show attendance is a very big one. So if you are visiting trade shows in other states, that is something that can trigger a physical Nexus trigger. I get why asked a lot about that. I always say don't shoot the messenger. I'm just stating what the facts are. But the way that the states view that is if you are in their state advertising for your business, that they're kind of assuming that your goal is to generate business in their state. So they have made that be part of physical Nexus. Another thing I see commonly is if you have inventory stored in outside states, A big thing I see with a lot of my clients who are selling through Amazon, if you are selling where Amazon is fulfilling the orders for you and they're storing your inventory in their warehouses, that's something that can create physical nexus. And then, remote employees where, post-pandemic where a lot of people are working remotely. Also, people are back to traveling. So if you've got people who are working in other states on staff with your business, even contract employees count for this. Or if you are just traveling to meet with clients for, whether it be sales visits, installations, trainings, anything that is putting an employee in another state on behalf of the business is something that can be viewed as a physical nexus trigger. So just, sort of keep all those things in mind. Economic nexus is something that came to the forefront through the South Dakota versus Wayfair ruling. I'm going to talk a little bit more about that on the next slide, but economic nexus has only been around now since 2018. So we're at 4 years now that economic nexus has existed. Economic nexus is when you are meeting what the state has determined as substantial economic presence in their state. So I have a slide in this deck that will show some of those thresholds and what they look like, but basically each state through the Wayfair ruling was giving the ability to set a limit that they felt deemed needing to register in their state. So a common one is $100,000 in sales, or 200 different transactions can trigger economic nexus. A big thing I want to point out, though, when it comes to nexus, whatever the trigger event was, that's what created nexus. So for example, if you've had physical nexus in a state for 5 years, there's no need to even evaluate economic nexus because you already have it. So whatever happened first, that's what established nexus. And once you had it, you have it, and that from there on out. So it's not something where you have to evaluate each one of these. The other three here, click through, affiliate nexus, and marketplace nexus. I don't see a ton of this in the Sage world. If you see anything on here that you have questions about, please send it over to me. But I don't want to spend a lot of time on this just because it's not something that comes up a lot in this space. Physical and economic nexus really are the biggest pieces. Affiliate nexus, I actually do want to highlight that a bit, is going to come up when you've got sister companies. So if you've got any other subsidiaries or other parts of the business that are sharing employees or sharing spaces, that is something that can trigger affiliate nexus. So I do want to point that out because I do see that every now and then. So to talk a little bit more about South Dakota versus Wayfair, this did happen in June of 2018. So again, we're 4 years past at this point. This was where the states were able to establish that economic nexus. Each state was able to set their own limit. So I would say the biggest misconception I see in the Sage world around the Wayfair ruling is people think this only impacts retail sales or online sales. That is absolutely not true. This affects anybody that is selling remotely. So if you are shipping product across state lines or selling something into another state that is outside of the state you are physically in, this can definitely have an impact on you. So I work with people every single day who you're like, oh, we don't need to, evaluate economic nexus. We don't sell online. That's just not the case. So just keep that in mind as well. So this slide is showing some of the examples of the economic thresholds I had alluded to before. So you can see that California and Texas are two of the bigger states in terms of their threshold is $500,000. Another question I get a lot is, in this world, I'm a manufacturer, I'm a distributor, I don't deal with sales that are, direct to consumer. Does this impact me? 36 of the states, I believe, look at gross sales. So they're not looking at just taxable sales. If you are selling this amount into that state, taxable or non-taxable, it is going to matter. So the $500,000 threshold absolutely does include gross sales. And then some of these other states, can vary. Some do only look at retail sales, but it's the minority. $100,000 to 200 transactions is the most common threshold. So in that case, it's $100,000 in sales or 200 transactions, meaning if it's 200 transactions worth $50, it's something that would trigger economic nexus. So I do understand this can be very, very confusing, which is why we have a lot of tools here at Avalara. I'm going to talk a little bit more about them to help you figure this out. If you're sort of, on the fence and you're not really sure if this is something that's impacting you or not, and you don't have enough interest, maybe to schedule a call after this presentation, I would encourage you to visit our website. We do have a free risk assessment on our website. I will tell you the truth. It is a free tool, so it's not going to provide very in-depth information, but it does allow you to plug in some sort of high-level numbers to just see if you're coming close to any of these thresholds. So it is just a good way to figure out if this is something maybe that you even should be worried about. So why should you address Nexus issues now? So complexity is growing. It has been growing now for a few years. It's just honestly getting worse and worse. Post-pandemic, the states have lost so much revenue, over the last few years, just like so many businesses have. And so the audits are getting aggressive. So with economic nexus and physical nexus, we haven't seen a ton of changes around this in the last year or so, but who knows, it could definitely still change. The biggest changes happened throughout 2018, 2019, and 2020 around this, but it is still kind of always changing. The rules are changing in terms of like rates, how products are viewed in every single state. I have a customer I'm working with right now who sells bakery items, and we're kind of digging into how complex their items are viewed in every state. For example, if flour is one of the first 4 ingredients, it's considered taxable in certain states. And if it's not in the first 4 ingredients, it's not taxable in some states. So it's just incredibly complex. That's just one example. I deal with a lot of companies that sell, medical devices or cleaning supplies, things that have varying uses. And because of that, the rules are constantly changing around how those items are actually taxed. So that gets very complicated. And then along with this, the compliance costs are increasing. So, the more states that you have to get registered in, the more products you're selling, the more ways that you're selling, the cost of keeping up with compliance is just getting more and more. I have some people who say they spend the entire last week of the month just dealing with filing sales tax returns. That is not something that is generating revenue for the business. So that's a big cost to them, in terms of time. And then also, even if you are looking at automation solution like Avalara, it is costly depending on how many states you're having to deal with or can be. So this is something that is not going away. Compliance is not optional. When it comes to proving if you are compliant, the burden of proof is on you. Something that I'm seeing a lot of right now, the state of California and the state of Washington are basically sending letters out to businesses that they find out might potentially be out of compliance in their state. So they're sending letters out to essentially trigger audits. I deal with so many customers who call us after they've gotten a letter and are sort of in a panic. And unfortunately, once the state has contacted you, you're sort of at their disposal. So one of the benefits of not having been contacted by the state is that you have the ability to sort of look into this and figure out where you're out of compliance so that you have options for fixing things before, a state comes knocking. Audits are something that are coming up on almost every call I have with customers. I always joke that it's very different talking to a customer who's never had an audit versus someone who has, in terms of urgency and trying to fix all of this. Obviously, if there's been an audit, the urgency is real. Usually once an audit occurs, most of the time, if you're, a business even slightly sizable, they're going to keep coming back year after year. So they're not going away. Something else that I see in the Sage world specifically, there's a lot of smaller businesses. The way that audits usually come up is because one of your customers who might be a larger customer or larger company, they might have an annual audit already. And if there's something sort of that comes up, maybe an exemption document was not collected, or if they weren't remitting their use tax properly, that can sort of bring up your name. And so that's where I get a lot of people calling in saying, I've got an audit that's come up because a client of mine has been audited. And then back taxes, penalties, interest rates that come with that can obviously get very, very high. Most of the states, if you're not registered where you're supposed to be registered and an audit comes up, typically the penalty rate is going to range anywhere from 10 to 50%, depending on the state. So if you haven't been, collecting tax for a significant period of time, not only would you owe the back tax, you'd also owe the penalty that state charges, as well as an interest rate. This also counts for if you are selling to someone who's tax exempt and you don't have an exemption document on file. So keep that in mind. If you don't have an exemption document to back up the sales, the state would view that as a taxable transaction. So the states are incredibly greedy right now. I was telling a customer earlier today, actually, that even since last year, this time, we're seeing such a difference in how audits are going. With exemption documents, for example, a lot of the states are being really forgiving about if you had a tax ID on file, they might forgive that you don't have the actual physical document. We're seeing now where people want you to have, the auditors want you to have that document on file. And the reason for this really is just that I think the total U.S. budget deficit is about $55 billion. Sales tax on average, I think, makes up about half of the state revenues. So, they've lost so much money over the last few years, especially with the pandemic. So they're just not being very forgiving in an audit. So one of the big things here is trying to understand where you're out of compliance so that you can make the right decisions for getting things corrected before, again, I've said this before, but before an auditor comes knocking. So some of the triggers, I guess, that I'm seeing with businesses I work with in terms of what makes people evaluate this. Obviously, audits are a big one. I get calls when they've received a letter or an audit comes up, but other things outside of that are, launching e-commerce. That's a big thing I've seen over the last couple of years. A lot of even my historically just manufacturer and distributing clients may be launching an e-commerce site, a new way of selling. So that's something that triggers this conversation to come up. Mergers and acquisitions. I had a call with a client yesterday that had just been acquired by a bigger company that wants there to be absolutely no risk in terms of sales tax. So they are, being very explicit that they want this all handled right now. So that's a big thing, mergers, acquisitions. If you're going to have an acquisition, companies don't want to obviously acquire a company that's out of compliance. And changing ERP systems, any new technology, those are things that usually bring this up in conversation, and then people will call and want to start handling it. So audit risk. These are some stats that we've pulled recently. The 60% of audits are targeting 4 industries, and the top 3 are what I see probably the most in the Sage world, manufacturing, construction, wholesalers, and distributors. I do have some retail clients, but it's fewer in my world. Obviously, retail is a big thing that people sort of assume is the only industry affected by sales tax, but I can tell you that is just certainly not true. I have tons of clients going through really intense audits that are just strictly manufacturers. One of the biggest things I see in terms of mistakes when I'm dealing with clients and going through audits is mistakes in their exemption management. Obviously, Nexus oversights are a big piece of this too, if you're not registered in the right places. But I think that just for me personally, the customers I'm working with, they don't have the correct exemption documents on file. I think about like the state of Florida has recently made it where a resale document has to be renewed every single year. People just don't know that. And so they don't have the right documents on file. So when an audit comes up, they don't have the right documentation to back up why they're not charging sales tax. And then all of a sudden they're, paying back tax that they didn't know they owed, plus penalties and interest. So it just gets very, very expensive. I'd say the average cost of an audit is $114,000. And that's obviously not just the cost of what you're paying, but also, getting outside counsel, the penalties, the interest, et cetera. So, I usually tell people it's a lot simpler to evaluate this before an auditor comes knocking than it is after the fact. So now that I've laid a bunch of maybe overwhelming information out on you guys, when I have these conversations one-on-one, people are usually telling me that I've completely overwhelmed them. I do want to kind of talk about what to do if any of this is raising a question in your mind, if you have any red flags in your mind. So I want to talk a little bit about how you can go about correcting any mistakes that you might have made or fixing any of these compliance errors. Before I do that, Sophia, I know we had a poll we were going to launch, and I think that doing this quick poll might give me some insight into where some of the people on the call sort of stand, and that will help me sort of tailor what I'm going to talk about in the next couple of slides. So the first question, where do you feel that your organization falls currently from a sales tax compliance standpoint? And these are sort of joking answers, but hopefully just tell me a little bit about where you think you stand, and I will definitely use that to tailor what I'm going to talk about next. All right. One person is being very honest. I'm in trouble. Sweating a little bit. So honestly, this is where I get a lot of people, you know, when I've done these presentations before, a lot of people are saying I'm a little bit nervous. And then we've got a couple of confident people on the line as well. So this helps me. I will definitely use this to tailor the next couple of slides. And then I think we have a second question too, Sophia, if you want to go ahead and launch that one. Question 2, if you do feel that you need help, what areas are you sort of most concerned about? So the first is, you know, Nexus. Are you sure if you're registered in the right places? Is that a question? Are you worried about the rates that you're charging? Are you worried about exemption management, returns? And then obviously at the end, I have no idea what I should even be worried about maybe. And if you do put that as an answer, you won't be the first person. I definitely have a lot of people who have this conversation who are just, you know, sort of at a loss for where to even start this project. All right. Somebody has a question about Nexus. We've got rates, we've got returns. So they're a little bit all over the board. So I'll try to touch a little bit on all of this. And hopefully, you know, in the next couple of slides, you guys will have sort of an idea of how to proceed with this. So, you know, this slide, the 5 steps to managing sales tax compliance, is sort of just in general a guide for the steps that you're going to take to start this project. Every business is different. You know, one of the things that I do, and like Sophia said at the beginning, I've been working in the Sage world for about 5 years now, and I've been working with RKL really closely that entire time. So every business I work with is different. So we always tailor the process for what your business is going to need. But generally speaking, the first step in this is doing a Nexus study, or we call it a risk assessment as well. That is something that we do offer as a service. I also have no problem telling you if you don't want to use Avalara for that. If you've never done a formal Nexus study or risk assessment, you know, even if you use your CPA firm to do that, just get one done, because it does give you some insight into maybe where you're missing the mark. And it's better to know maybe what you're ignoring than to just be sort of ignoring everything and, you know, putting your head in the sand. So the Nexus study that we offer, we have a few different options. I'll talk a little bit more about them in the next couple of slides too, but generally speaking, that process is going to start with a questionnaire that we would send you. You would go through and answer very specific questions about your business activities that are happening in every state. It covers everything economic and physical. So when we get that questionnaire, we take that information and we convert that into a really detailed report that would explain to you where you have Nexus and why that Nexus was created. Part of that process is then taking the why or the when you created Nexus and establishing if there's any liability. So if you've had Nexus in a state for 3 years, we want to determine, all right, how much have you sold into the state since you created Nexus? How much potential liability is there? If you're in a situation where the liability is significant, if it's an amount of money that you're like, oh my gosh, how are we going to deal with this, plus the penalties, plus the interest? You have options. As long as the state has not contacted you, you have the ability to enter that state through something called voluntary disclosure. I cannot stress this enough. This is only available if there has been no contact between you and the state. So this is where you have to evaluate it sort of on your own so that you can qualify for this program. Voluntary disclosure is an amnesty program that is offered by the states that will guarantee penalty and interest abatement. So you would have no interest or penalty to pay at all. And it also limits the look back period. So if you're in a situation where you've had Nexus for an extended period of time, it can cut off some of the tax liability that you're actually owing the state. So it is a great option when you're in a situation where the liability might be extensive. Part of that process is getting you registered with the state. So kind of looking at step 2 here, the voluntary disclosure will get you into the state without having to pay everything that's due and go ahead and get you registered. If you're in a situation where you have Nexus, but maybe there's not any liability, maybe everything you've been selling has been tax exempt and you have the exemption documents to back it up, you wouldn't have any liability. You would just get registered with the state so that you can start filing a return. And yes, I have lots of customers that have to just file a $0 return. It's just a matter of, from a compliance standpoint, you're reporting on your sales to that state. Steps 3, 4, and 5 are handled typically by our software solution. And I have a slide coming up that's going to go into a little bit more detail about that. But essentially, we can help to calculate tax where it's applicable. We can help you track your exemption certificates from your clients. And then we can also handle the filings for you. So this slide is just kind of giving a very loose overview because, again, it is very different customer to customer. We have a couple of different versions of our risk assessment, and it really just depends on how long you've been selling, what you're selling, if you're selling something that has varying taxability, or if you're selling something that's just truly tax exempt, on which type of risk assessment you might need. I would say to anyone on this call, if you have even a question in your mind that a risk assessment or a Nexus study is where you need to start this process, let's please just have a one-on-one call to kind of get a little bit more information about your business so that I can give you some more exact information about pricing as well as what type of Nexus study you would need. But we have a couple of different types of risk assessments. Generally speaking, our standard Nexus study takes about 4 to 5 days to complete. So once you've completed the questionnaire, we'll get you the results back. And from there, we have a professional services team where that will get on a call with you to evaluate the information, answer questions you have, and typically they will make a formal recommendation for what the next step should be. Sometimes that next step is just going ahead and getting registered in some new states. Sometimes the next step is to do a voluntary disclosure, and sometimes the next step might be to further evaluate exposure. So there's just varying steps depending on the business. We do have risk assessment Nexus studies that include this tax exposure analysis piece. Again, it just really depends on your business as to what pieces of this are necessary and how long it will take to get it all completed. Generally, once someone has done a risk assessment and we know what state you're going to be dealing with, this kind of turns into 2 projects, one in which you're working with our professional services team to determine how to get set up with each state. And then the other part of the project is talking with me about how to implement our software to help you with actually automating all of this so that you're not having to, all of a sudden deal with tax rates in 30 states and file sales tax returns for half the month. So this is sort of, I don't usually love to talk about our software a lot on this presentation, just because I feel like this, mostly was supposed to be educational about Nexus, but I also don't want to leave you with thinking, oh, if I get registered in 30 states, how on earth am I going to deal with this? So I do want to kind of explain how our solution works. Avalara, what we are in a nutshell, is a cloud-based tax engine. So we are keeping up with all of the sales tax rates, the rules, jurisdictional boundaries across the country here in this engine. So once you're set up in the states that you need to be set up in, which is part of that Nexus study process, our software is going to come in and help you automate everything so that you're not having to change how you work day to day. So the way that this works is we have a direct integration into Sage 100. We also have direct integrations into a lot of the commonly used shopping carts, e-commerce solutions. And so we override the native tax functionality in those platforms. For Sage, as an example, we override the tax schedules. So all of the states that you would be registered for sales tax in, we would be tied to the tax schedule for those states. And when you're running an invoice in Sage, as you would today, it's going to initiate a call out to our tax engine. We will calculate the rate and put that directly back into the invoice in real time so that you're charging that customer the correct rate based on where they're located. So we would keep up with all of the rates. You would never touch a tax schedule. You would never have to do any research on rates. We would be handling that through our tax engine. Another big piece of our puzzle, especially in the Sage world, is Avalara exemption management. So the exemption management tool has two big primary functions. The first function is it's going to give you an automated way to collect and manage your exemption documents from your clients. So instead of having to ask someone to send you, an exemption document and they're trying to fax it to you or mail it to you, or maybe they don't even know what you're asking for, and there's a lot of back and forth, you will be able to send a digital request for this document to your customers through our exemption management portal. When they get that email, they will have a link that when they click it, it prompts them to put in the state that they're located in, the reason that they're tax exempt. So if they're a reseller or a manufacturer, whatever reason that they're tax exempt, they will select that from a drop-down menu. It's then going to pull up the document required for that state for the reason that they're exempt and prompt them through filling it out. So it makes it very simple for them to give you the information that you need without having a lot of questions. Once they submit that, it would come back to us. We store it. We keep up with the expiration date if there is one, and then we can alert you when it's time to get a new one. So that's sort of the first function, is it's giving you a way to collect and manage those documents. The second way that it works is that we are going to also, when you're running invoices in Sage, while there is that call out to our engine for the rate, we're also checking to see if that customer has a valid exemption document on file. So if they do, that tells us not to charge tax in that instance. And then, at the end of the day, when you are finalizing invoices in Sage, all of that data would get pushed into our system, where we would be keeping up with a liability report for every jurisdiction that you're in. And then at the end of the month or the quarter, whenever it's time to file for that particular jurisdiction, we actually have the ability to file and remit those returns on your behalf. So all of that to say, if you do need to get registered in some additional states and part of your, hesitation is, how am I going to manage this? Just know that that is what our compliance solution does. We will automate this fully. Any questions? Please, please, please ask questions.
Yes, thank you, Alex. So yeah, we're gonna open up the floor for any questions right now. Again, you can use the Q&A feature at the bottom of the screen to submit any questions. So it looks like we do have a few. So the first one is, how difficult is automation to implement and set up? We are a small business and we don't have a lot of time to dedicate to tech support.
Sure. So one of the big benefits of being an RKL client, RKL is one of our certified implementation partners. So if you are in a situation where you're planning to implement our solution, RKL will actually do all of that for you. And so they can usually do that in about 1 to 2 months total. Obviously, it's going to vary depending on your exact scenario, but you would not have to do any implementation. RKL would handle that piece of it for you.
Great. And we have another one. When you hit an economic threshold, are you automatically registered in that state?
No, you are not. So that is, one of the points of doing a risk assessment or Nexus study is to see if you have Nexus, because nobody is tracking that and until sort of they are, until an auditor kind of gets a whiff that maybe you haven't been registered and you need to be. And then at that point, if they come knocking, like I said, you're at their disposal. You are never going to be automatically registered. So you have to, it is on you to keep up with when you're triggering a new Nexus, so that you know when to get registered in a state. Now, partnering with us, if you are, new as a customer, the risk assessment or Nexus study will be how we actually determine where you have Nexus at, the first step or at the beginning. But once you're using our software does track ongoing economic Nexus. So if you don't have Nexus everywhere, when you're getting set up, our software will track any new economic Nexus.
Great. And another one for exemption certificates. Should I just have a database for certificates I can reference, or should I link them to each transaction?
So you typically want to have them linked to each transaction, because if an auditor comes in, they're going to want to see, the document tied to each transaction. I will tell you, almost nobody that I talk to that's managing that manually has that. Our solution will make that possible, to have each transaction linked to an exact document. But typically they do want it linked. I will say that if you have a document on file that you can pull to back up a transaction, typically I don't think that that's going to come back on you in terms of a penalty and fee, but they do want to actually see a document that's linked to each transaction. So, that's a vague answer, but there's not really a good way to do that. And so I don't usually see people who are manually keeping up with exemption documents have that. So, they do want to see it, but typically if you have the document to back up the sale, they will typically let that pass.
Okay, so I'll pause for a few more seconds to see if we have any more questions coming in.
And, as we're finishing, I will just say, if you have any questions that were not answered on this, or if you want to talk specifically on this next slide, let me go ahead and move it over. Has my contact information. Please shoot me an email if you have any questions. Also, you can feel free to shoot them over to your RKL account manager. I work really closely with all of the account managers on the team, so they can certainly forward your questions over to me if you'd rather reach out to them. And, I would love to have a one-on-one consultation if anybody wants to talk more specifically about, your business and what might be an appropriate first step.
Yes, great. Thank you. So it looks like we don't have any more questions. So I just want to thank everybody for attending today's webinar. We will be sending out an email within the next couple of days with the slides and replay video. And we hope to see you all at our next event. Thank you.
Thank you.